All right, we're diving into a really fascinating mystery that's playing out right now in the crypto world. It's all about a company called BitMine, ticker BMNR, and some very unusual moves being made by the biggest names on Wall Street.
So let's start with this number, because it's at the heart of the whole story, 31.69%. As of right now, that's how much of this one crypto stock is owned by institutional investors. We're talking about the big banks, the hedge funds, the huge asset managers.
But here's where it gets wild. Just 2 weeks ago, that number was only 6%. That is a fivefold jump in Wall Street ownership in, less than 2 weeks. This isn't just a slow trickle of interest. This is a stampede.
Which brings us to the big question, right? What on earth happened? What are these financial giants seeing in this company that maybe the rest of us are missing? Let's dig in.
First up, we really need to get a handle on the sheer scale of this buying frenzy. This isn't just a small shift in sentiment. No, this is a massive, seismic event for this company's stock.
And what's really striking is just how one-sided this bet is. Look at this. Out of 354 major institutions that hold this stock, 352 of them are long. They're betting the price is going to go up. Only just two, are betting against it. That's a 99% bullish consensus. You almost never see Wall Street agree on anything that completely.
And we're not talking about small-time players here. These are the absolute titans of finance. Morgan Stanley has grabbed almost 10 million shares. BlackRock, the biggest asset manager in the world, they're in for over 3 million. You've got Vanguard, JP Morgan Chase. I mean, when you see a list of names like this all making the same move at the same time, you have to ask, why?
So what is the big idea here? What's the story they're all buying into? Well, it boils down to a really powerful and actually pretty simple idea. They think BitMine is about to become the MicroStrategy for Ethereum.
Let's break that down for a second. For years now, investors who wanted Bitcoin exposure in a regular stock account bought MicroStrategy. Their whole game plan is super simple. Buy Bitcoin and hold it. End of story. Well, Wall Street seems to be betting that BitMine is going to play that exact same role for Ethereum. But, and this is the crucial part, with a twist. Their strategy isn't just buy and hold. It's buy, stake, and generate yield. Now, for that strategy to even be possible, you need one thing, a massive pile of Ethereum. And this is where the numbers just get absolutely mind-boggling. Right now, BitMine is sitting on over 3.6 million Ethereum coins. Just let that sink in for a second. Not thousands, not hundreds of thousands, over 3.5 million ETH. And to put that number in perspective, because it's so huge, that 3.6 million ETH represents about 3% of the entire circulating supply of Ethereum in the world. A single company holds 3% of this massive global asset. It's unbelievable. Put that into dollar terms, and the company's treasury, all its crypto and cash, is worth over $11 billion. And they're not just sitting on it. They've been buying the dips, adding tens of millions of dollars worth of ETH recently, which tells you they really believe in its future. But look, just having a huge pile of assets is one thing. The real story, and probably the reason all these institutions are jumping in right now, is what BitMine is planning to do with that pile. They're about to flip a switch and turn this static asset into a full-blown cash flow machine. And this isn't just some vague hope. They've laid out a crystal-clear game plan. Step 1. Early 2026, they launch their Made in America staking operation. From there, they start paying out dividends to shareholders, all while positioning themselves to ride the next crypto cycle peak. This is a clear step-by-step roadmap, and institutions love that kind of clarity. So what is staking? Well, the simplest way to think about it is like earning interest on your crypto. By helping to secure the Ethereum network, BitMine earns rewards. Right now, that's somewhere around a 3 to 5% annual return. Now, it's not totally risk-free, of course, but it's a way to generate a massive recurring revenue stream on an $11 billion asset. You can do the math on how huge that could be. And that strategy gets even more powerful if Ethereum itself goes up in value. You've got well-known analysts like Tom Lee calling for ETH to hit over $7,000. If that happens, BitMine's treasury nearly doubles in value. Of course, you gotta remember, the opposite is also true. If ETH's price falls, their treasury takes a big hit. That's the core risk here.
And then there's this. They've already declared a small dividend. And yeah, it's a modest amount to start, but it is a landmark moment. It's a signal to Wall Street that this isn't just some speculative crypto bro company. This is a business focused on cash flow, on maturity, and on returning actual value to its shareholders.
Okay, so if this story sounds so good, that begs an obvious question. Why is the stock down over 80% from its all-time high? And this gets us to the Great Divide, this huge difference in how regular retail investors and the big Wall Street players are seeing this company.
It's like you've got two groups of people looking at the exact same chart and seeing completely different things. On one side, a lot of retail folks see an 81% price crash and they feel fear. They're looking at the brutal crypto winter we just went through and thinking, nope, not touching that. But on the other side, the institutions, they seem to be seeing a massive opportunity. They see a company that's trading for way, way less than the value of the Ethereum it actually owns. And we can put some numbers on that. Based on the value of their ETH holdings, especially if a forecast like Tom Lee's comes true, some analysts figure the company's real value could be around $146 per share. And today, it's trading for about $31. That huge gap, that potential discount, that's what has Wall Street piling in.
And that leaves us with the final multi-billion-dollar question. Is this massive price drop a giant red flag that retail investors are right to be afraid of? Or is it the entry point of a lifetime that the smartest money on Wall Street is quietly taking advantage of? One of those groups is going to be proven right, and the answer probably has everything to do with the future of Ethereum itself.